Are we on the brink of Bitcoin's biggest breakout yet?
Experts like Clem Chambers share insights on why Bitcoin is poised for greatness.
And the beauty of this video, you'll garner the key points in mere minutes.
Stay tuned as we uncover the comparative strengths of Bitcoin versus gold.
Welcome to Financial Insights in Minutes, where we break down crucial topics in finance.
Get ready as we dive deep into why the Fed's moves could reshape your portfolio.
But first, let's delve into insights from Gary Shilling on what the Fed is truly worried about. Anchors away on our next journey into the economy. What's got the Fed in a tizzy this time?
Let's get straight to the facts. Dr. Gary Shilling believes the Fed's recent panic reflects more than meets the eye.
Time to navigate through these turbulent waters. What insights does Dr. Shilling provide? What's at the heart of Dr. Shilling's discussion?
He emphasizes that the Fed's panic is tied to signs of softening in job markets and a struggling housing sector.
Let's dive into the job market trends. What's Dr. Shilling observing?
He notes that weekly job claims are dropping, but this could mask deeper issues, especially in tech where layoffs are climbing.
And what about those alarming Fed policy changes?
The 50 basis point cut speaks volumes. It suggests desperation amidst softening labor markets and inflation concerns.
Are external factors like China playing a role?
Absolutely. China's weakened state is sending ripples through global markets.
How does this affect corporate profits?
While currently strong, there's potential for these profits to stagnate as the economy shifts.
What predictions does Dr. Shilling have for the Fed?
He forecasts more aggressive rate cuts if the economy continues on its current path.
And what about the impact of China's economic situation?
Dr. Shilling believes China's stimulus is too little too late, which could exacerbate global deflation.
What are the crucial takeaways here?
Investors should approach with caution and adjust portfolios towards defensive sectors for what's to come.
But wait, there's more. Up next, will stocks melt up to S&P 6,000 plus soon? A discussion featuring insights from Lance Roberts.
You won't want to miss those valuable insights. Stay tuned.
Time to navigate through these waters. Are stocks on the brink of a major melt-up?
Here's the scoop. Lance Roberts lays out his case for an S&P 6,000 target by year-end based on some bullish market patterns.
That's quite a swell. What technical indicators is he spotting to support this surge? Let's break down Lance's main thesis. He believes strong technical patterns are gearing up the market for a significant rise.
Exactly. The formation of a cup and handle suggests that after breaking out, the S&P could realistically hit between 6,000 and 6,300.
Now let's dive into the first key point. The chart formation known as the cup and handle. What's it telling us?
It's a strong bullish indicator. This pattern suggests that the markets are preparing for an upward move.
And what about the implications of recent monetary policy changes?
The Fed's easing stance is a crucial factor. With lower rates, investor confidence typically rises, potentially driving markets higher.
Let's discuss earnings forecasts. What's the outlook there?
Earnings expectations are climbing. This could serve as a strong tailwind for the target numbers we're aiming for.
What are the big predictions Lance is making?
His target of S&P 6,000 is based not just on technicals, but also on positive investor sentiment leading up to the elections.
Are there any warnings about market volatility?
Yes, the election could introduce some noise, but the overall trend towards highs seems secure for now.
Summarizing, markets appear ready to rise, bolstered by strong technical and earnings forecasts amid an easing policy backdrop.
Exactly, and while volatility may arise, the bullish outlook remains intact.
And don't miss our next segment. We'll be revealing insights into the crypto wildcard. Bitcoin is about to shock the world.
Trust me, Game of Trades will blow your mind with what's in store. You won't want to miss it.
Anchors away as we delve into the curious case of Bitcoin. With the Federal Reserve cutting interest rates, what's this mean for the crypto world?
Let's get straight to the facts. Bitcoin's trailing behind the S&P 500 and gold. Are we witnessing the calm before an explosive market shift?
It sure sounds like a wild ride ahead. What's causing this divergence? So what's the core thesis we're exploring from Game of Trades?
The thesis presents a perplexing scenario. Bitcoin remains about 15% under its all-time highs, even as the S&P 500 hit new heights. What's brewing beneath the surface?
Let's break down those key points. The Fed's rate cuts. What's the ripple effect here?
Absolutely. As the Fed cuts rates, gold and the S&P 500 soar, showing a favorable investment climate, yet Bitcoin just doesn't seem to follow suit.
What about the US dollar's role in all of this?
When the dollar weakens, Bitcoin becomes more affordable internationally. In a well-known trend, as the dollar dips, Bitcoin often surges due to increased foreign demand.
And those valuation models, what do they tell us?
They indicate Bitcoin could be up to 100% above its current level. The last times this occurred were golden buying opportunities.
So, what are we banking on for Bitcoin's future?
With current trends and investor psychology, we could witness a notable rebound, potentially re-establishing an upward trajectory towards those previous highs by the end of the year.
What's the grand takeaway from this analysis?
In summary, Bitcoin's undervaluation coupled with favorable market conditions could lead to a substantial rally. But is it really the calm before the storm?
And hold on to your trades. Coming up next, insights on gold is for war, Bitcoin is for the getaway, with Clem Chambers on Kitco News.
You won't want to miss these insights as we explore the flight capital narrative.
Anchors away as we navigate Bitcoin's rise as the ultimate flight capital.
Here's the scoop. Clem Chambers argues that Bitcoin isn't just digital gold, but a vital escape plan in uncertain times.
And now we're set to dive deeper into the crypto seas, exploring its rally and connections to global dynamics. So, what's the main thrust of this conversation? Why is Bitcoin dubbed the ultimate flight capital?
The crux of it is that with increasing geopolitical tensions, Bitcoin provides a swift escape mechanism for wealth compared to traditional assets like gold.
Let's break down the surge in Bitcoin. What's driving this price against the shark tide?
A significant factor here is liquidity from central banks fueling not just Bitcoin, but the entire crypto market.
How do gold and Bitcoin compare in this chaotic landscape?
While gold is viewed as a safe haven, it's cumbersome compared to Bitcoin, which offers liquidity that can't be matched.
Speaking of adoption, how's mainstream cryptocurrency usage shaping up?
PayPal's moves signal progress, but user experience remains a challenge, impacting potential adoption.
What kind of future do experts foresee for Bitcoin based on global events?
Chambers warns that escalating tensions globally will likely fuel further Bitcoin rallies, similar to previous market reactions.
Let's wrap this up with key insights. What should investors take away?
Investors should recognize Bitcoin's burgeoning role amidst chaos. It's not just an asset, it's a lifeline in turbulent times.
But wait, what's next on our horizon? Up next, we uncover how the unfolding situation in China will shake the global economic landscape.
Stay tuned as we break down insights from Jeff Snyder on this pivotal subject.
Let's dive right in. China's latest colossal stimulus, game changer or mere illusion?
Here's the scoop. Jeff Snyder discusses how China's promise to boost the economy through stimulus is being met with skepticism in global markets.
A colossal wave of optimism. But is it just a mirage? What's really bubbling beneath? So what's the main thesis here? Are we looking at a seismic shift?
The core thesis argues that while China's massive fiscal measures may seem promising on paper, the actual market reaction suggests that deeper economic issues remain unaddressed.
Let's unpack China's stimulus announcement. What are they really promising?
They're promising massive stimulus aimed primarily at halting the decline in home prices, an economic lifeline in a sinking market.
And how are markets responding to this tsunami of stimulus?
Market reactions are quite tepid. While Chinese stocks see some euphoria, the bond and energy sectors remain unconvinced, showing signs of stress.
Now, let's talk about what's under the surface. What deeper problems persist?
The stimulus doesn't tackle the fundamental economic stresses. Unemployment rates are troubling, and retail sales aren't rebounding as hoped.
So, what does Snyder predict, looking ahead?
He predicts that this stimulus will likely yield only temporary effects. Unless real systemic changes occur, we're just prolonging the inevitable.
And what about the sustainability of the economic decline?
China's aging demographics could accelerate this decline. If structural issues aren't resolved, sharp declines in consumption may follow.
To wrap it up, what are the key takeaways from this analysis?
The crux of the matter, despite huge stimulus packages, markets are signaling alarm bells. Deeper problems lurk beneath the surface.
But hold on to your hats. Up next, we explore insights from FX Evolution on the last 3 times this happened. Markets went crazy.
This one's going to be a wild ride, so don't miss it.
Anchors away. Let's dive into the latest market shifts and Bitcoin's potential.
Here's the scoop. We're seeing some interesting activity in the markets as we approach the end of the year.
Absolutely. What mysterious signals should traders and investors be paying attention to? Could 2024 be shaping up as the year for Bitcoin? What's the main thesis?
The core thesis is that amidst weak market conditions, certain signals are indicating potential bullish momentum for Bitcoin, similar to past performance during this period.
What does the market sentiment look like now?
Current sentiment suggests bulls are taking the lead, but we must remember these surveys are lagging indicators.
And what do buybacks indicate?
Buybacks often drive prices higher. Goldman Sachs' prediction for $1 trillion confirms this bullish outlook.
So what's happening with Bitcoin?
Bitcoin typically rallies in the last quarter of the year, and we're starting to see early indicators of this trend.
What predictions does this suggest for Bitcoin?
Positive trends in September typically lead to a robust October, indicating potential gains for Bitcoin.
Any insights on upcoming market dynamics?
Expect volatility in October. These fluctuations could present excellent buying opportunities.
So what's the takeaway from all of this?
As we analyze these trends, it suggests a possible revisit to Bitcoin, while the broader market shows strong signs too.
If you're finding value in these insights, consider subscribing.
Your support helps us continue delivering valuable market insights to keep you ahead.
As we wrap up, we've heard from some incredible minds discussing Bitcoin's promising future.
That's right. Clem Chambers paints a very optimistic picture, predicting a thrilling potential for Bitcoin to hit $100,000.
Meanwhile, Gary Shilling emphasizes caution, pointing out the economic signals from the Fed that could impact the entire market.
And let's not forget Lance Roberts spotting bullish patterns that could propel both Bitcoin and the S&P 500 higher.
Overall, they've all agreed that Bitcoin is becoming a vital asset in these uncertain times.
Don't forget to like and subscribe if you found these insights valuable.
We aim to keep you updated with quality financial content, so you won't want to miss any of our future videos.
Thanks for tuning in. Make sure to check out other videos on our channel for more financial insights.